All right. Well, hello, everyone. Thank you guys for joining in for this 2022 market update, 2023 market forecast. I'm Leela Grace. I'm the manager here, the area manager. But I also wanted to unpack a little bit about FNF added value offerings to help you to decrease expenses, reduce your liability, and generate income. Y'all know that we're entering into a little bit different economy now with a downturn. So we thought that it would be very pertinent to discuss these items. I always like to start off first just to remind you of what FNF strategy is. This is a slogan that my local rep team came up with a few years ago. And the question that we had was, what is some things that we want to do really well as far as our action steps here? And so this is something that we felt like that we're really striving toward, that we already do well, but we're always seeking to improve. But it's creating a true partnership through consultation, education, and innovation. It's really those three things. So we meet quite often as an agency team to really ask ourselves, what is the top agents, the needs that our title agents have, what are their top needs? And two is what offerings do we have, do we already have, or that we need to have to help them? And it's something that we love to talk about, and things that we love to innovate as well. All right, so let's talk about the market update 2022, and I'm going to talk about the headwinds and the tailwinds. Obviously, we know that the Fed is spending a lot of their time and energies in trying to slow the housing industry, right? And they're doing it by rates, increasing interest rates. That's the tool that they use. Low inventory. Inventory continues to be low, but it has been building quickly. Obviously, affordability issues. It's a huge headwind that the market has right now in consumers being able to afford homes. Inflationary, we will further impact that, but prices continue to increase in student loans. And some of the tailwinds that we're experiencing is in spite of the highest interest rates with mortgage loans and credit cards, consumer spending tends to be very positive. The market, still very low employment. In fact, there was a report that came out the last week that the market added another 263,000 jobs, which surpassed what the experts would have thought. And so that's really not helping the Fed in some ways and slowing down and trying to offset the inflation. So we'll further get into that. And obviously in the demographics, the long-term, demographics as well. Interest rates, as you guys know, average 30-year interest rate now is about 7% plus. To see how this impacts the affordability on a $240,000 loan amount, the monthly payment would have been $986 on a 30-year loan at a 2.8%. Believe it or not, that is what it was about a year ago. And now it's about a little bit over 7%, and that payment would have been $1,600. So you could see, I mean, this has a clear impact on the affordability of, mortgage loans. Love this website. If you haven't been to it in the past, it's showingtime.com, but it shows the realtor showings. You can see that the South, the area that we're in, is down 27% year over year. Has declined quite a bit over the last 3 months. The West leads the way on the declines with 44% down, Midwest down 11.2, and the average is 17%. So the showings have gone down quite a bit. As far as mortgage applications, the refis are down 86% year over year. Those are basically non-existent, as you guys know. And resales are down about 42% year over year. And this just shows a chart of the existing home sales. And they declined again last month at 24% year over year down. And you could see from the January high of 2022 and where the trend, and I'll talk about this a little bit later, but I think we'll continue to see some declines month over month. Let's talk about our local areas. First, Tennessee and Alabama. Nashville, the number of closings down the third quarter year over year compared to 2022. 2021 is down 19-20% year over year. Limestone County is the only county within our area. It's in Alabama, around the Huntsville area, that's up 3.9% year over year. The national average existing home sales are down 23% year over year. So we're right in line, if you look at our area, right where the national average is. Obviously, the home appreciation rates are still very healthy. Nashville leads the way up, being up about 23% year over year. And you can see the other counties as well. In the Kentucky, Bowling Green leads the reduction in closings, the decline in closings year over year with 48% year over year. Of course, you have the Louisville market that's down about 19% in the third quarter compared to 2021. Again, the national home sales average is down about 23%. So you can see how the other areas compare with that. Appreciation rates are still very healthy. Bowling Green leads the way with up being 20% up year over year. All right, well, I thought this data was interesting. This is premium 9 months going into 2022 compared to 2021. Tennessee is one of the only states. Tennessee and Alabama actually are the only two states. There's a few others that's up year over year. Leads the way at 10.8% up year over year as far as premium written. Alabama's up 8.3. Kentucky is down about 6.5. I think if you took the average, it would look more about 12% down year over year. There's a lot of things that goes into that, but I thought this was an interesting chart. All right, well, this is just a summary. Existing home sales, we talked about that earlier, down about 24% year over year. The median prices are up about 13%. Pending home sales index down 31% year over year, 16 straight months of declines, and I would expect that to continue to be the case. Inventory is still low. You know, inventory will continue to tick up some, but it's still low. Mortgage interest rate 7% plus. Unemployment rate is still about 3.5%. It ticked up a tiny bit month over month. It's about 3.7%. Let's look at the forecast for next year, and this is quite interesting. MBA and Fannie Mae are the two sources that we usually compare information to and actually create our plan from. But you can see the gap as far as how they project or the range. MBA, if you look at total home sales, the highlighted area, they project a 7% down from 2022 to 2023, whereas Fannie Mae, they project a 20% down. So both experts, they do change their information month over month, every single month. I am planning, if I had to project, I do think that next year is going to be down approximately 15% from 2022. What we do know for sure is that the first quarter of next year is going to be down even from what it is now. Of course, refis down 73% year over year. They project another 23%, MBA and 44% Fannie Mae down year over year. All right, what are some action steps that we would encourage? Number one is obviously make sure that you're in good shape from a financial standpoint. Make sure that you have a reserve. If you need help with planning, that is something that we help our agents with. Contact myself or your rep. We also perform a workflow analysis. Make sure that you're operating as efficient as you can. This will further help you to reduce costs. Staff costs are always going to be the highest cost. Make sure that you're adequately staffed for orders that you're having in, orders that come in. Most operations will wait later than they need to. So I would definitely analyze that and make those changes. And I guess the last thing is we not only want to try to bring down expenses, but we want to generate income, and we do that by sales. If you need help in trying to create a sales environment within your office, or to generate income, feel free to reach out to us, and we'd be glad to help you with that. All right, well, let's talk about some of the value-added offerings that some are new, some are older that we've had, but that we can definitely help you in 2023 with. Number one is Tidal Wave. A lot of you guys know we've had a Tidal Wave for quite a while. I would say the biggest benefit, especially during a downturn, is it helps you to reduce costs and reduce your liability. Liability is the biggest risk that agents carry. And the number one claim has always been on the title search. So if F&F performs the title search, we take away that liability 100% if the search error is on us. It does integrate with your software as well. So your staff, it does create efficiency of your staff having to type that up as well into a commitment. That search will generate into a commitment into your software. Feel free to reach out to Chad, Heather, or myself, and we'd be happy to tell you more about that. Education. Y'all know this is something that we do a lot of, and we do it well. We've already created with a 2023 plan for our area between having a mix of live workshop and WebExes. So stay tuned for those e-blasts that's going to come out to sign up. But this is just to show you that our commitment is still there, and we plan on doing a lot of education next year. All of the workshops that we do live, we also record in the WebExes as well, and we upload it to our lead, our online intranet site. Go to lead.fnf.com/midsouth, and you see a full menu of courses there, many of which are CELE and CE approved. And again, this is just another way that we can easily help you in educating your staff. Title Journey. This is new. This has been out for like the last year. It's an online course on Lead, but this is us helping you partner with you in training your new employees. It brings your employees through the life of a file. It's approximately 13 to 15 hours of coursework. Contact myself or your agency rep about this, and we'd love to give you a demonstration. All right, well, we do a lot of commercial work on behalf of our title agents. We want to be your one-stop shop, and what that means is that you send us a commercial deal. It can be anywhere in the United States, and first is you can benefit from the work share, and we can be the liaison to kind of your back room. We can generate the commitment, we can conduct the search, we can disperse, we can even issue the title policy, and we take the full liability away from you of that commercial transaction. Please contact myself, Jennifer Gaitalis, the manager, and we'd be happy to give you a tutorial of that as well. All right, well, we love to consult. We talked about that earlier. ACS is a program that we created many years ago. We've gotten much better at it, have a lot more improved content, but we want to help you generate sales. We want to help you to reduce expenses, and we also want to help you with planning, and we help with financial reports. First is the workflow analysis. I alluded to this earlier. My staff has a tremendous amount of expertise when it comes to workflow. We would come into your office, observe your workflow, and that at the end of a few days, we would give you a written out plan and how you could reduce workflow, improve workflow and to reduce costs. And this is something, again, this is just part of being one of our agents. We also help on the financial planning side. F&F obviously has a lot of reports. As a manager, it's something that I'm responsible with for my operations. We will partner with you and help you to financial plan to not only educate you, but our reports do integrate with QuickBooks. And so, we can also help you with that as well. Sales training, we want to help you to generate more income. And so all of my sales reps are very highly trained in not only how to create an environment of sales to where your entire team believes they're in sales, but also we do work with individual sales reps as well with the reports they utilize, with how they communicate, their action steps in generating more orders. So we'd love to help you with that as well. Well, thank you that you choose F&F. We know that you guys have a choice as far as who you use to write with, and thank you that you chose us. This is my management team and my reps. Feel free to reach out to me, and we would love to tell you more. Thank you, and have a great day, and I'll talk to you soon.